Imagine holding a single gold coin in the palm of your hand. It's cool to the touch, solid, and feels like a tangible promise of something more. This video is for educational purposes only and is not financial advice. Many people stare at that solitary coin and feel a sense of inadequacy, convinced that the game of wealth is reserved only for those who arrive at the table with stacks of gold bars. But watch closely as that coin begins to shift. It doesn't just multiply, it transforms, rippling outward like a stone dropped in a still pond, stacking upon itself until it towers into a mountain of gleaming, golden peaks. Whether you are looking at $100 or a $10 million empire, the underlying physics of that growth are identical. The math doesn't care about the size of your bank account. It only cares about the consistency of your habits and the clarity of your vision. We often fall for the illusion of scale. In reality, the strategies that protect a small nest egg are the exact same ones that preserve a generational fortune. It is a simple, elegant truth. Wealth is not a destination reserved for the lucky few, but a process governed by the same engine, regardless of how much fuel you start with in the tank. The weight of $100 can feel heavy when you are trying to stretch it, just as the responsibility of 10 million feels daunting when you are trying to keep it. Both require the same discipline, the same patience, and the same ability to look past the immediate noise of the market. You aren't playing two different games. You are simply at different mile markers on the exact same road. Let's pull back the curtain on how this machinery actually works, starting with the very first step you take today. When you are staring at a $100 bill, the fear is tangible. You watch that number fluctuate, and your pulse quickens because that cash represents your immediate physical comfort. Then, the zeros start to pile up. The stakes shift from immediate comfort to future security. You're worried about losing the status, the freedom, and the life you've spent years meticulously constructing. Most people assume that if they just had more capital, they would be calmer, more rational, and more disciplined. But the reality is almost the exact opposite. Think of it like driving. But when you're cruising down the highway at 80 miles per hour, that same bump feels like a life or death crisis. Your grip on the wheel tightens. The market doesn't change its behavior based on your bank balance. It doesn't care about your mortgage, your retirement dreams, or your pride. If you don't master your psychology early, you are essentially building a bigger house on a foundation of shifting sand. The goal isn't to get to a point where you no longer feel the weight of your decisions. It's to understand that the weight is a feature, not a bug. It's time to stop looking at the account balance as the scoreboard and start looking at your own temperament as the true asset. Steering that ship requires fuel, and at the start of your journey, that $100 to $10,000 bracket, that fuel isn't found in a brokerage app. Imagine you're holding a single, unassuming seed. At this stage, your capital is too small to move the needle through compound interest alone. That isn't wealth creation, it's a rounding error. You are the soil. Think of it as the sapling phase. Your primary goal right now is to widen the gap between what you earn and what you spend, not to chase the next hot stock. Every dollar you spend on learning how to be more valuable to the marketplace is a dollar that pays dividends for the rest of your life. The trap most people fall into is trying to play the game of a millionaire while they're still building the foundation of a tradesman. But the math is simple. You cannot scale a mountain if you haven't built the boots to climb it. You're ensuring that when you eventually have $100,000 or $1 million to deploy, you have the income streams to back it up. And once that engine is powerful enough, you won't have to rely on luck or leverage to move forward. So, stop looking for the shortcut in the ticker symbol. Once you shift your focus from the account balance to your own utility, the growth happens naturally. And as those roots dig deeper, you'll find that the next phase of your journey, the transition from building to scaling, becomes not just a possibility, but an inevitability. Now, you are standing at the base of a significant incline. You are no longer just pushing a rock uphill, you are watching it begin to roll on its own. Think of this phase as the moment the snowball gains its own center of gravity. But now, something subtle is shifting in the physics of your wealth. For the first time, your money is starting to do the heavy lifting for you. This is the crossover point. It's a quiet, private victory that most people never talk about. It's the realization that your capital has officially become a second employee. It simply compounds, layering interest upon interest, day after day. At this level, your primary job is to protect that momentum. You'll be tempted to help the process along by chasing higher returns or jumping into the latest volatile trend. Resist that urge. You aren't looking for a quick sprint to the finish line. You are looking for the steady, relentless force of a glacier. You are transitioning from being a manual laborer of your own finances to becoming a steward of an automated engine. You'll notice that your focus shifts from the anxiety of how much can I squeeze out of this month to the calm confidence of how can I keep this machine running for the next decade. This is where you stop obsessing over the micro fluctuations of your account balance and start trusting the macro velocity of the system you've built. As this momentum solidifies, the path ahead starts to look less like a steep climb and more like a high-speed highway, leading you toward the threshold where true wealth begins to take on a life of its own. You aren't just building a pile of cash anymore, you are architecting a bridge. This is the stage where the structural integrity of your wealth becomes more important than the speed of its growth. It has roots. But that only holds true if you stop treating your capital like a gamble and start treating it like a fortress. You've spent years pushing the gas pedal to the floor, chasing every percentage point of gain. Diversification isn't just a buzzword you read about in textbooks. It's the structural steel in your bridge. You are spreading your risk across different asset classes, equities, real estate, perhaps some fixed income instruments to ensure that no single event can collapse the span you've worked so hard to construct. You are no longer solely dependent on the volatility of a few high-growth stocks. It's that subtle moment when you realize your money is starting to pay you back for the years of discipline you poured into it. But here is the catch. With more to lose, the temptation to overtinker grows. Resist that impulse. Stick to the design. Protecting your capital isn't about being stagnant. It's about ensuring that your wealth survives long enough to compound into something truly transformative. As the bridge solidifies beneath your feet, you'll find that the landscape of your financial life looks different. With that foundation firmly in place, the scale of what is possible begins to shift, opening the door to a level of capital management you hadn't even dared to imagine. Entering the seven-figure territory isn't just about adding another zero to your net worth. It's the moment your financial life stops being a sprint and transforms into a fortress. Now, the mission changes entirely. You are no longer fighting to conquer new ground. You are tasked with guarding the kingdom you've cultivated. When you hold between $1 and $10 million, your primary adversary is no longer a lack of capital, but the erosion of it. This is where you pivot from the aggressive hunger of the accumulation phase toward the quiet, calculated discipline of preservation. At this altitude, you aren't just an investor, you're a steward. It's about building a structure that can survive not just your own lifetime, but the generations that follow. We start looking at tax efficiency as a high-level strategy, moving assets into vehicles that shield your wealth from unnecessary friction. This is the era of staying rich. It requires a different kind of courage, the courage to stop chasing the hottest trend and start prioritizing the boring, reliable mechanics of wealth protection. You are essentially fortifying your position, creating a moat that allows your capital to work in the background, untouched by the storms of volatility. It feels different here, doesn't it? You're no longer checking your accounts every morning with a racing heart. Instead, you're looking at the horizon, planning for a future that extends well beyond your own timeline. It's a shift from the scramble of the early days to a sophisticated, calm mastery of your resources. You're crafting a legacy, ensuring that your efforts translate into lasting impact, and setting the stage for the final evolution of your financial life, where the focus shifts from the protection of assets to the intentional deployment of a lifetime of work. Yet, even with a fortress built of sound strategy and compounding returns, the architecture of your wealth faces a persistent, invisible enemy: your own internal wiring. At the start, when your capital is small, the primary trap is the siren song of overtrading. You feel that because your pot is modest, you need to force growth through rapid-fire transactions. But in this game, every jumpy move is a leak in your vessel. True growth requires the quiet, agonizing boredom of letting time do the heavy lifting while you simply sit on your hands. Now, the enemy isn't restlessness, it's lifestyle creep. A promotion arrives, or a portfolio milestone is hit, and suddenly, the needs begin to outpace the gains. You upgrade your surroundings, your vehicle, your habits, not because these things bring lasting fulfillment, but because your ego demands a physical manifestation of your new status. Every dollar you siphon off to maintain an image is a dollar that loses its ability to work for you in the decades to come. Then there is the final, most paralyzing hurdle: fear-based selling. When the headlines turn apocalyptic and your portfolio reflects a significant dollar value drop, the primal part of your brain screams to protect what you've built. But here is the truth that separates the masters from the spectators. Your reaction to volatility is the price you pay for the privilege of long-term wealth. Every investor eventually reaches a point where they have to decide if they are building a monument that can withstand the storms or a house of cards that shivers at the first gust of wind. You are training your temperament to be as robust as your balance sheet. With this internal mastery finally locked in, you are ready to stop merely accumulating and start orchestrating the final, most meaningful chapter of your financial life. Whether you started with a single $100 bill or you are currently navigating the complexities of a $10 million empire, the underlying mechanics of your success have remained identical. Wealth is not merely a tally of digits on a screen. It is the physical manifestation of your patience, your discipline, and your refusal to yield to the noise of the crowd. Look back at the trajectory you have carved. You have graduated from the frantic hustle of early accumulation to the sophisticated strategy of preservation and growth. You now understand that the market is not an adversary to be conquered, but a vast, rhythmic ocean that rewards those who know how to set their sails and wait for the wind. The volatility that once kept you awake at night is now nothing more than the background hum of a system you have learned to navigate with steady hands. This is the blueprint you now carry. Prioritize consistency over brilliance. Value the long-term compounding of your decisions over the fleeting adrenaline of a trade, and protect your peace as fiercely as you protect your principle. You are no longer chasing the market. You are crafting a legacy that will outlast the current cycle, the next recession, and the inevitable shifts in the global economy. As you step forward, carry this truth with you. The most significant gains were never found in the ticker symbols you chose, but in the person you became while holding them. You have built a foundation that is as resilient as it is expansive. The heavy lifting is done. Now, it is time to enjoy the compounding interest of your character. You have the tools, the perspective, and the clarity to define what success looks like on your own terms. Do not let this momentum stall. Take the next step today, whether it is rebalancing your portfolio, automating your savings, or simply refining your long-term plan, and solidify the progress you have fought so hard to earn. Your future self is already thanking you.